Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 21st of November 2016 and we are commenting on gold premiums surging in India on Friday to a 2-year high. We reported in our video entitled Warning, India Scraps 500 and 1000 rupee banknotes overnight on the 8th of November that the Indian government withdrew higher denomination notes, the 500 and 1000 rupee note, from circulation and gave its citizens until the end of December to exchange them for new notes, providing the excuse that it's part of its fight against black money, monies obtained via illegal and black market operations. This caused no end of problems, including curbs on cash withdrawals from banks, resulting in enormous queues and a degree of consumer panic. The next unfolding scene of this saga is that gold premiums in India jumped to a 2-year highs on Friday as jewellers ramped up purchases on fears that the government might put curbs on gold imports. Although retail demand has been reported as subdued due to the cash crunch, dealers were charging a premium of up to $12 an ounce over official prices, which also include a 10% import tax. The premium was the highest since mid-November 2014 and compared with a premium of up to $6 an ounce last week. Chirag Thakar, a director with Amrapali Group, said, quote, "We are seeing some jewellery demand due to the ongoing wedding season and crash in prices. But the cash constraint is going to be really tough for the gold industry in the near future, especially from rural areas," unquote. This could prove problematic, as 2/3 of gold demand actually comes from the rural areas, where jewellery is regarded a traditional store of wealth. Supporting this fear, Manjesh Devi, a jeweller based in Satara, Maharashtra, who caters mainly to farmers, said, quote, "Our business has nearly stalled due to the cash crunch," unquote. Meanwhile, premiums in China rose up to $10 an ounce against the international benchmark from $5 last week. Siri Ji, an analyst with metals consultancy GFMS, said, quote, "The buying could be driven by the panic in reaction to the recent depreciation of the yuan," unquote. However, premiums elsewhere, such as Hong Kong, Singapore and Japan, either remain modest or trade at a marginal discount. So what can we all make of this situation in India? Well, frankly, it's difficult to tell. If trade has slackened, one would expect a reduction in prices to attract more. However, if retailers are concerned about future supply, we can understand the raising of premiums. With Prime Minister Narendra Modi warning on Saturday that there could be more measures against black money after the December end deadline to deposit the scrapped currency, one can only guess what such measures will be. Our sources tell us that he is on a mission. He won't be thwarted from his task to crack down on black market operations and is determined to increase the tax take on earned income to acceptable levels as opposed to the derisory ones currently received. With all of these rumours currently circulating, we are reminded of articles published back in March 2014 where smuggling of gold into India was on the rise, estimated at around 700 kilograms per day. This was then mainly caused by the government hiking the import duty on gold 3 times, eventually to 15%, to curb demand for the precious metal and rein in a widening current account deficit that had touched a record high of $88 billion in 2012 to 13. With premiums rising, cash being squeezed, and potential import controls being muted, we are confident that similar attempts to smuggle gold in record volumes into India will be enhanced. If such controls are introduced and is successful, then India, one of the world's leading gold importers, being unable to import the same levels of gold as previously, will undoubtedly have an effect on its price. However, this is just rumour for the moment, and we have to wait and see how events unfold. Currently, gold is standing at $1,214 and silver at $16.69 an ounce, marginally up this morning. However, we still expect further downward pressure during the next 2 weeks or so. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.